Today I'm going to be teaching you a tool I use so much and I think is so helpful, and I know other traders do. I use it in every single trade, and it's usually used when you're entering on a trend of a trade. So for an example, on this bearish trend we're consisting of lower lows and lower highs all the way down here. And what equilibrium does is it marks out where price might retrace to for you to fill in a good discounted price range. So it's gonna give you a good idea on where price is gonna go for you to enter on a discounted price range. So to access this tool, you're gonna wanna go down to the third box on TradingView, and you're gonna wanna click on the Gone Box tool. And as soon as you create it, it's gonna look like some, weird, it's gonna look really fucking weird. So you're gonna wanna go to settings and take off every single price level that's not 0, 1, or 0.5, and on the vertical time level, anything that's not 0 or 1. So it leaves you something like this. So now if I was to be in this time frame right here, if I was trading at 4:30 on April 4th, I am looking for shorts. I would obviously have to wait for price to retrace for me to enter. I'm not going to enter at the very bottom. So what I would do is I would take the last low, and drag it up to the last high, and it gives me this range between 0 and 1, and it gives me a level of 0.5. And so usually price retraces to half of the move. So so as we can see here, price has moved just above 0.5, and now it's moved back down. So we can continue doing this on the trend. So if you miss this move here, you go to this low, this high, drag it across, and we can see that price went into this discounted price range and continued to move lower. So this happens a lot in trends, and it is just one of those confluences that you can use to better your trades and enter at better times. So what I would usually do is I would put equilibrium here, make it the last low. I'm looking for a price above this point, and then I can zoom in further on something like the 1 minute and look for an entry like a fair value gap or a break of structure or a retest on the level. So as we can see on the 1 minute, we're looking for this price range. So we can see in the 1 minute, price moves down, retests back up, but doesn't break this last low or this last high, or we break structure here, have a retest, and you continue to go lower. Now it's also important to know that we can use these on bigger time frames, because bigger time frames also make trends. Now to look at a bullish example of equilibrium, we go from the last high to the last low. And what can we see? We can see price moves into this discounted price range before pushing back up. You can think about equilibrium as anything below or above 0.5 is liquidity for the market, where banks or retail traders are going to fill their orders. So they let price fall into this level sometimes and then move back up. We can see that this doesn't work all the time, so you really have to be in a strong trend move to actually use this thing confidently. And yeah,